Hello and welcome to another edition of Who Moved the Market. I'm Surabhi Upadhyay and today we are going to talk about records because records have been shattered on the street. Yes, the Nifty has managed to scale fresh all-time highs. Not only did the index cross the 18,887 peak, it also managed to scale 19,000. And it's been a remarkable journey because it's taken a long time for this index to move past the psychological barrier of 19,000. It's taken actually 21 months, nearly 2 years to be precise. So it has been a long grind and a long wait. The question is, what now? How should investors look at the market at current levels? What are the important triggers and factors to track? Which are the sectors that could be hot for the next coming several months and maybe even years? Well, I have Santosh Pandey joining me, who is from Nuvama. He heads the securities business at Nuvama Wealth. And he looks at a lot of the non-institutional clients, the large clients who have very influential positions in the market. So he's in the thick of the action and best place to tell us how to read in between the lines. Santosh, thank you very much for joining us on the show and welcome to Who Moved the Market.
Thank you, Survi. Thank you for having me. Congratulations for 19,000.
Congratulations to you as well. Well, the bulls are really making the most of this midweek just before the holiday, right? It's a great afternoon and lots of enthusiasm all around. But, I want to start with the basics. What's the feeling that you have right now, Santosh? It's been a dizzying rally. We were looking at, a very different scenario back in February and March, just after the budget. But April, May and June, things have turned, and how? So what's your first sense and what's your gut feel when you look at this rally?
See, Surbi, we are still long in the market, and what we believe that there are reasons to market go all-time high. And these reasons are, if you see, good corporate earnings, good equity participation from the retail, strong capex, and lot of similar reason like current account deficit is also in control, crude and inflation is in control. So lot of macro and micro factors are participating in the market. And if you see in last 3 to 4 months time, there was a very broad based rally. Earlier we have seen rallies, but it was either of large cap rally or mid cap rally. But this time we are seeing small cap, SMEs, large cap, each and every stocks are participating and from all the sectors.
That's true. Actually, despite the fact that we're looking at all-time highs, the Nifty's only rallied 5% this year. So if you look at it in that sense, it's not a huge move. Are you confident that this is still a market where people can put fresh money to work? Or is this a market where perhaps, maybe some profit taking, especially in mid-caps, maybe that would be more advisable?
See, if somebody is going for portfolio approach, we believe that yes, we can still be investor in the market. But yes, Surabhi, there is a lesson always we will get that at all-time high and decent market, we should always correct our mistakes. So we will find a lot of stocks in portfolio where we feel that we should come out and participate in good quality stocks. So yes, we should always go and check our portfolio, but we suggest that we should be investor in the market.
Okay, so you want to remain invested apart from some of the dud stocks and the not so great stocks in terms of fundamentals. Got that. So Santosh, what gives you the confidence that we will indeed see higher levels from here? What is the outlook for the second half?
See, Survi, market is participating because of corporate earnings. If you see last quarter corporate earnings, we are growing above 22% approx. Lot of good quality stocks are participating. Along with that, current account deficit is in control. Government expenditure is also going up. Your interest and inflation is in control. I think a lot of these factors which is participating in the market, and we believe that it will keep on participating in future also.
Okay, where do we stand with respect to valuations, Santosh? I think we're at what, 18 times, if not more. So how does that contrast with the average? And just in terms of the value zone, where is the market now?
See, right now, Survi, we are participating at 19 multiple, right? FY25 forward, right? But if you see corporate earnings are, a lot of good quality stocks are participating, giving profit more than 25%. So a lot of these categories pedigree we should see, and we should grab these stocks for future participation. I don't see there is panic in the market, but yes, we have to find out good quality stocks and participate. We cannot see this market right now basis on index, because index is the barometer. There are so many good quality stocks which all are doing good. Corporate governance is good, management is good. So a lot of things are there. So we suggest that we should keep investors investing in the market.
Okay, so you've made a case for a bullish call and, and perhaps even more upsides from here. So Santosh, then the next question is, what should we have our eye on? There are some themes in the market that have worked so well. Manufacturing, defense, these have been like the poster themes of the present run-up. Do you still think that it's the same themes that will continue from here on, or do we have to look at, maybe a sector churn? What's the sense?
Still, we are bullish on these sectors like manufacturing, capex, banking, real estate, because we believe that this PIL is going to work wonder for manufacturing sectors. If you see, lot of global companies are investing in India right now. Recently, Foxconn has invested. Lot of semiconductors companies are investing in India. So manufacturing will keep on doing well, along with capex that is going to do well. Like government is spending huge on roads, ports, and infras. So a lot of private players are now in the form of private equity, and AIFs are also putting money in these sectors. So capex is also looking good. Banking, you can see that inflation is in control. NIMs are at all-time high, and credit growths are good. So we believe that banking should also do well here. And because of interest rate, I think real estate is also going to do well. So we believe these 3-4 sectors are going to do well in future.
Okay, real estate, banking, capex, manufacturing are some of the names that you've mentioned. Let me ask you on manufacturing, Santosh, because this is a very large sector. I mean, right from an auto company to a company that's making, bearings to, some of the industrial goods makers, everything really falls under manufacturing. So how are you narrowing it down further? Within manufacturing, what sectors, what sort of companies should one look out for? If you could give us some names, some examples, perhaps that would be great.
See, we like manufacturing capex driven, like Ador Welding, Extra Microwave, we are recommending from our research desk. From banking, we are liking ICICI Bank and all. So very selective, yes, but we should keep on participating.
Okay, since we're talking some of these themes, I want your specific take on defense as well, because here again, we've seen a huge rally, and Santosh, people would worry. I mean, when they see, let's say, a stock like, HAL or some of the others like Mazgaon Dock is up 400% in the last 1 year, right? So people might wonder if it's time to quickly get off some of these stocks. If you have them, great, then you just keep them in the portfolio. But for those who are feeling a little left out and if they've not participated in the defense rally, what should be done now?
See, we may see some consolidation, Surabhi, but still we are bullish in defense. You are seeing so many development which is happening. Just now, Modi ji has what we have seen that what kind of signing we have done in US. So lot of positive impact is going to come in India, and we believe that still defense will do well. But we may see some consolidation, and whenever we get some correction, we should add these stocks in portfolio.
Okay, so you're still keeping, the thumbs up on the defense space. You mentioned banking.
Yeah.
And the sector is set for a very interesting move, right? We're looking at the HDFC Bank merger, a huge, large entity combined. Now, within banking, are you more comfortable with private banks? Should one be looking at PSUs? I mean, 2022 was a great year for PSUs. Now they've taken a bit of a backseat, relatively speaking. So again, within banking, what would you look at? And would you go beyond banks? Would you look at anything else in financial services as well?
See, microfinance are also looking very good. I think we should look at decent NBFCs also. But yes, we are more focused on bank. We should see some good PSU bank. But we will prefer to go in banking like ICICI and Axis as per our research recommendation, and some mid caps like CUB.
Okay. In this entire conversation, Santosh, we've not spoken about consumer stocks. And that's a large part of the market as well, right? Whether you're looking at FMCG, whether you're looking at any other format of consumer, retail, hospitality, etc. What's the sense there? Do you not like the consumer space now?
See, consumer space, hospitality still we are recommending hotel stocks, right? But in FMCG, we are seeing that I think right now they are overvalued. We may see some consolidation there, and we should wait for further participation. But yes, there are so many other things are there on FMCG. I think we should look for that.
Okay, so not very, very enthusiastic because of the
Yeah,
valuations on
yeah.
FMCG. Got that. So Santosh, okay, tell us the key do's and don'ts now, especially for investors who might be putting fresh money to work, not simply riding the rally, but adding fresh money. First of all, how would you divide it? Like for every 100 rupees, how much would you now put in mid caps and small caps? And how much would go into large caps? And I'm talking about a moderate risk profile investor over here. And are there any other specific do's and don'ts that you need to keep in mind, whether it's the time horizon, any specific checks, whether it is promoters? By the way, a lot of promoters have been selling stake in block deals as well. Forgot to sort of talk about that. That's also a recent trend. So tell us if that worries you. And basically, what are the checks and balance you need to ensure if you're now entering at all-time highs?
See, if you are entering at this level and if it is a fresh entry, then we should have a few things in mind, Surabhi, that we cannot judge the market basis on few corrections. We have to keep on participating. I think at this level, we should put fresh money 30-40%, and then we should wait for some consolidations and corrections, and then we may add more. But yes, if you want to see participation on sector specific like mid cap, small cap, and large cap, we will prefer more mid and small, and some part should also go on large cap as a diversification. But yes, more should be on mid and small cap, and it has to be a 6 to 12 months time horizon, keeping in mind.
Got it, got it. So that's some advice, I guess, and it's worthwhile for people who are entering in now to keep some of these points in mind. Great talking to you, Santosh. Thank you very much for taking out the time and giving us the view at Nuvama Wealth in terms of how Nuvama is reading the market. Thank you very much for joining in.
Thank you, Surabhi. Thank you.
All right. Well, friends, with that, we are out of time on this edition of the show. So there you have it. It's been a record-shattering day for the Nifty. We've looked at 19,000 on the screens today, and it seems that bulls do want to retain control of this market. Well, thank you for viewing. We'll be back. There's a market holiday tomorrow. So after that, we are back on Friday, and we are going to see you with a whole new set of stocks and new themes.